Hey there, it's monthly market time. Most of you are simply looking for a summary about what's going on in the desert real estate. Well, that's hopeful. There's a lot more to market insights than simply a summary. A lot more than whether prices are going up or down or the market is slow or hot. What you hear on TV and radio is usually pretty negative, right? Like, the sky is falling or watch out, recession ahead. It's pretty boring and hardly accurate, but unfortunately, it's what everybody's talking about. They don't talk about inventory levels, days on market, seasonal averages, attrition rates, or discounts. All of these data points paint a picture and tell us a story of what's going on in a particular market. Consumers also want to know, more importantly, how the data affects them, right? You know, what's in it for me? So I'm going to break down the component data points for you, how they are related to each other, and share my market insights. Stay tuned. I'll be right back. Hey there, it's me, Stefan Burchard, the Desert Bow Tie Realtor here in the Greater Palm Springs region. I record and post content here about the local market and the desert lifestyle because I love what I do. But more importantly, I believe real estate should be fun and easy. You're back for what's in it for me, so let's hop to it. Prices. Valley median prices for single-family homes closed just above $642,000, which is down 2.7% from last year. And condos closed at $435,000, which is down 4.4% from last year. These numbers are for the entire valley. Breakdowns of the same stats for each city are on the chart I send out every month, and it's also linked in the video notes. This information is important because it shows price trends. Buyers and sellers get an idea of where prices are for the entire valley or for a particular city. The percentage change gives us an idea where prices are trending. If you need more detailed information about neighborhoods or subdivision, give me a call, text, or email. I'm happy to provide it to you and interpret all the details. Months of supply. Valley months of supply still stands at 3.5 months, which is more than last month, but up 34% from last year. Months of supply, aka attrition rate, is important because it shows how many months of supply we have if no new homes are added to the market for sale. It is one of the measures showing how quick homes are moving. The higher the demand, the lower these numbers will be, and the lower demand, the higher these numbers will be. These stats are also broken down city by city and by price point in the full Desert Housing Report. That you can find on my website and in my newsletter, and also referenced in the notes as well. Days on market. Days in market, days on market, it's the same freaking thing. This is the average time a property is on the market for the valley. This number can be higher or lower in any city, subdivision, neighborhood, or even a price point. It's all about demand in those areas. Currently, our days on market is 37 days, which is the same as last month, but it's up 5.7% from last year. We are seeing it slowly creep back up, but it's still well below our pre-pandemic averages of 65-ish days. We're not predicting a return to those pre-pandemic averages due to the higher demand for desert properties. Woohoo! Even with the higher interest rates, the days on market is still pretty low. Each city and price point is broken down in the full report. Check it out. There's a lot of information in that report for you data junkies. Just saying. Why is this important? Well, sellers get a rough idea of how long it might take to sell their home, and buyers get an idea what the average time homes are on the market for in a particular city or price point. If a home has been on the market longer than these averages, seller may be willing to negotiate. You never know. For example, just because a home may have been on the market for 50 days doesn't mean squat if the average day on market for a particular area is 65 days. Right now, there are a lot of sellers negotiating since home sales are slower than they were over a year ago. If you know of somebody considering buying or selling in the Palm Springs region, give me a call, text, or email. I promise I'll take excellent care of them. Inventory is the current number of properties that are available for sale in the market. Our inventory currently stands at just above 2,100 units, which is up 3% from last year. Let's put that into perspective. At the height of the pandemic, inventory was reduced to less than 600 units. Before the pandemic, our inventory averaged 2,500 to 2,900 properties. Inventory really doesn't mean much without understanding the other stats and how they work off each other. Over time, you can see how this inventory number has decreased since 2018. This shows the increase in demand for the desert. Now, notice before 2020, we had two seasonal ups and downs. These were normal for our market. Then around May of 2020, you can see the result on our inventory due to the COVID rush and high demand. Next, we have sales volume. This is the actual sales activity that happens monthly. For the Greater Palm Springs region, this is broken down into two graphs because of the seasonality that affects our sales activity. We have a 3-month average and a 12-month average. For the 3-month average, we currently have a combined total of 513 homes sold. Before the pandemic, September sales averaged about 700 to 800 units per month. Notice how the graph jumps up and down as it follows our seasonal pattern. During the COVID rush, however, it shot up over 1,000 units per month and got as high as 1,300 units in early 2021. That high demand eroded our inventory to below 600 units. For perspective, that's about 25% of our previous normal inventory levels. Now, the 12-month average removes this seasonality and shows the trends in how homes are selling year over year, averaged over a 12-month period. There are no seasonal ups and downs on this graph. Notice how it shot up during COVID from July 2020 to July 2021. We're still below pre-pandemic averages of 800 to 900 units. Before COVID, there was relative stability in this particular graph. It skyrocketed during COVID and is now slowly returning. Notice the steady decline since July 2021. This was due in part to the lack of inventory and is now coupled with those pesky high interest rates. These numbers are important since they show buyers and sellers how many homes are selling desert-wide, and they're a good indicator of demand. We are down approximately 25% from our pre-pandemic averages. Currently, we are at 599 units per month. Selling over list price shows how many homes are selling above or below list price. A positive number means that they are selling above list price, and a negative number means they are being discounted off list price. This graph demonstrates demand, but more importantly, competition. This time last year, more than 21% of homes were selling above list price. That's down from the high of close to 60% of homes selling above list price during the COVID rush. Currently, we're at 16.5%. That's slightly below last month. It shows we are seeing good activity and homes are still selling close to list price. Before the pandemic, we would only see about 10% of homes selling above list price. Pricing is the most important factor, in my opinion, and a major key in creating excellent, strong interest in properties. I believe if a home is priced and staged really well, it sells at, list, or over. I believe knowledge is power. So now, understanding this data better, you can make more informed decisions with confidence. My market summary? Well, sales are still hovering roughly 30% below pre-pandemic levels. However, it is on a slow rise from the decreases we saw since last year. The current decreases we are seeing are following our seasonal trends we see every year, coupled with those interest rates. The market is stable because we have a good balance of buyers and sellers. So it's a healthy market, slower than usual, but healthy. As inflation cools off, which we are slowly starting to see, we will hopefully see those interest rates start to creep down. That will increase activity in our market, and especially across lower price points. Don't hold out for those 3% interest rates we had in 2020. I'll be shocked if I see it again in my lifetime. Remember, don't wait to get into real estate. Get into real estate and then wait. You can always refinance when rates drop if you can qualify at the current interest rates. So go for it. There are many different loan programs that will make it so you can qualify. Please like, comment, and share this video with a friend or family member who may be looking to buy or sell here. Now, watch this awesome video about how I reluctantly got into real estate. It's a hoot. Bye! I record and post content here about the Greater Palm Springs. That was. And the higher these numbers, before the pandemic, our scrolling.